This is, I'm going to say, a 10-minute real estate investing 101 for agents. Underwriting properties can get tedious. We're not going to go through a full masterclass of that this second. However, I do want to give you all a few things that you can keep your eyes on when working with investor properties, investment clients, so you know what the Claude project we're going to do is talking about. So, first things first, we're only going to talk about a couple strategies here. Probably the most common that you all will run into. Those are buy and holds. That's when somebody buys a property, throws a tenant in there for a year or years on end, rents it out, and sails off into the sunset. Then we'll do a quick high level on fix and flips. Those are our favorite. If anybody loves HGTV, that is always going to be our fun shows. We take a broke down property, make it beautiful, and sell it for a great property, or excuse me, a great price point, or at least that's what they show us, online. And then we'll talk about STR, short-term rentals. Those are going to be our Airbnbs, VRBOs. So we will talk a little bit about that. So, as we know, our most common kind of investment that we work with typically as agents is going to be buy and hold. So, these are investors looking for properties that may need light modifications, updates, but the goal is to really rent these properties out to tenants. These are not Airbnbs. This is you place a tenant in for an annual lease and you hold that property for years and years, and that is how you recoup the money. So, buy and holds, I typically find, are one of the most popular ways that agents are working with investors. And these don't have to be your investors buying 10 or 20 deals a year. A lot of times, a lot of buy investors are high income earners, doctors, dentists, lawyers, you name it. People that are looking for different ways to invest their money and diversify their portfolios. This is a very common thing we see as agents. Now, I talk to a lot of agents that are first learning about investments. They go kind of, hey, how do I know what a good deal looks like? Or what does good look like if I'm looking for a buy and hold? And there's a few things that we can quickly look at and identify to know if it's worth looking at the property or worth sending a property over to a client. The first, has anybody ever heard of the 1% rule? Don't all respond at once. We don't need to be shy. Nobody? Nobody? Okay. The 1% rule is kind of an old school rule of thumb when looking to evaluate an investment property. It says that your monthly rent should equal 1% or above of the purchase price of the property. So I'm going to take an example over here on the right. If we purchase a property for $300,000, our 1% rule should tell us that the monthly rent should be at least $3,000 a month. Now, in the way in which the market has been going over the past, 6, 7, 8 years, that rule is really a screening tool. And that's what all these are. They're not fully underwriting a property, but we're seeing close to 1.5 to even 2% of that monthly rent needing to be secured of the purchase price to see a property actually pencil. So the 1% rule, if you ever see a property that's, I'm going to say, a purchase price is 400,000, but it's only going to rent for $2,000 a month, chances are it's not even worth looking at or sending over to your client. Another good quick rule of thumb is the 50% rule. So we want to be able to look at all of our operating percent or expenses and make sure that they are 50% or less of the gross rent. So that's including things like taxes, insurance, vacancy, maintenance, all the expenses that go into operating a property. We want to make sure that those are less than 50% of our rent before we have that debt service tackled on there. So looking at our example, we can see that first our 1% rule, it is below the threshold. However, our 50% rule is, fairly close. So maybe it does make sense to be able to take a look at this. Hillary, I'll get to the STRs. Those are going to underwrite a little bit different. I'll do that in I think those are next or 2 slides down the road. And then last, we have our cap rate, our cash on cash, and our DSCR. Cap rate is really used for commercial properties. It's not very applicable to residential investments. And the reason being is residential investments are typically not priced based on cap rate like commercial properties. They're more priced in line with the general residential market. But you will quite often see that on the MLS, on Zillow, wherever you're looking at homes, that if somebody's trying to sell a house or a home as an investment, they're oftentimes going to quote a cap rate. It's good to understand that the cap rate is simply your net operating income divided by the purchase price. Typically, a strong cap rate will be anywhere from 5.5 to about 8%, depending on the market. So just to give you kind of a rule of thumb, and then I'm going to skip over cash on cash. We won't go too deep into all these formulas. You have your DSCR, debt service coverage ratio. If you've ever worked with a lender on a DSCR loan, that is just the net operating income divided by the annual debt service. So lenders typically want 1.2 to 1.25% to write on these numbers. By the way, I'm more than happy to share this little presentation if anybody thinks it'd be beneficial. That way you have it in your back pocket. Oh, Hillary, I lied. It's fix and flips and then it's STRs. And then we'll get into the fun AI part here. So fix and flips are our famous HGTV special, I like to call them. These are where we are seeing, we buy the old fixer-upper, we throw some money on it, make it beautiful, and get it back on the market. And really, fix and flips are pretty simple. There is a term called ARV, which stands for after repair value. In order to make a fix and flip work from the numbers, typically you need to pay 70% or under of the ARV. So we have a little example here. Let's say we have a beautiful property that once we fix it up, it's going to sell for 40,000. We know it's going to cost about 60,000 to do those renovations. So what we need to do is we need to times the ARV, the 400,000 by 70 for 70%, deduct the 60,000 in rehab, and then we have our offer price. Fixing homes is not cheap, and a lot more of the cost goes into it than just the rehab numbers. So if you're ever working with somebody who wants a good deal on a flip, or they say, hey, I want to get started in real estate investing, I want to flip a home, find me a good deal. If anybody's heard that, I know I have. Oftentimes a good deal is something that's 70% or under the ARV. That's going to pencil and typically give these investors room to be able to close at a net profit. Next, we have our STRs or our Airbnbs, synonymous short-term rentals. Short-term rentals are an entirely different beast. They are underwritten differently than something like a buy and hold, or they're underwritten differently than something like a fix and flip even, because there's a lot more active management and involvement in these than just placing a tenant once a year or flipping the property. But when you get a fix and flip, or excuse me, when you get a short-term rental right, they can be very profitable depending on the market. So a couple things we always need to look at on STRs, and there are resources out there. AirDNA is one of the big ones that has a lot of the data, but we need to know what the average daily rate is. We need to know the occupancy of the neighborhood that we're moving in, and we need to know what's called the RevPAR, which is that daily rate times our occupancy to get our annual revenue. Now, these are very expensive to operate. Management costs are very high. There's always going to be turnover. You have to consider so many people go into Airbnbs, aren't necessarily the family. A lot of times they're the bachelor party, I like to call it. So stuff's going to break. Things need to be replaced. So these are much different when underwriting. But a good rule of thumb, anytime somebody's buying a short-term rental, I do always highly, highly recommend that they underwrite the property also as a long-term rental. So I'm a firm believer that if you buy an STR, it should also be able to cash flow under the same rules as a buy and hold, like the 1% rule, like the 50% rule, to make sure that you are covered in case your occupancy does not get as high as you would have hoped. So if we look at an example, this same property, If the average daily rate is $180, occupancy is at 65%, which is fairly strong, and that does vary depending on the market, we can then conclude that our annual revenue is going to be about 42,000. NOI will end up roughly at 16,000. That's still pretty strong. I would imagine a comparable property would probably be closer to an NOI of 6 to 8,000 on a buy and hold for a similar property when looking at this occupancy. So short-term rentals, it's very important to underwrite properly, but we could do a whole hour on just how to underwrite STRs alone. But AI is going to make it a lot easier, so you don't need to know all of these. Last couple things before we jump into the AI piece is what makes a good deal. Deal qualities, it's always important to remember that the numbers need to work at today's rates and rents. And what I mean by that is no praying that a deal will work if something changes next month or next year. If anybody's buying an investment, it needs to work from day one, and it can't be on a hope and a prayer that in 2 years we know that there's a new development coming and it's going to raise rents by 20%. We do not want to carry that cash burden for 2 years. Then we also always want to make sure that our estimates and assumptions are very conservative. We never want to overpromise, underdeliver on investment metrics. Exit plans become very important. Most seasoned investors will have an exit plan for everything that they purchase. If it's a fix and flip, if it's a buy and hold, if it's an STR. And lastly, I'll skip over the reserves. Those are important, but we want to make sure that all the expenses are always verified. Immediate deal killers for any investment are things like property taxes. How many people forget that when you buy an investment property, it can no longer be homesteaded, and we're going to see a reassessment on those property taxes. That can very quickly kill a deal. Next, insurance quotes are always a big one. People oftentimes underwrite insurance, they underwrite maintenance, and then the last one I highlight is always HOA restrictions and rental caps. So it's important to understand how those affect any sort of investment. So my last kind of rules of thumbs to real underwriting. And again, we're going to jump into the AI part here where it does the heavy lifting for us, is that there are rules of thumbs, things like our 1% rule, things like 70% of ARV, but that does not automatically mean that the deal will cash flow and pencil property. We want to make sure that we are always verifying all of our expenses, and there is a full underwriting process for any investment purchase. More often than not, your investors are going to do this themselves. But if you all work with any clients like I have worked with, we all know that they lean heavily on their realtor to be experts. So it's important to understand how a lot of these mechanisms work. However, at the end of the day, I do remind people that we are not the ones making the investment. We are not the underwriters. We can just guide our clients in the best way possible. So without further ado here, did everyone get this screen project? Did everyone make a copy or copy and paste this somewhere where they can save it? Give me a thumbs up, give me a head nod, something so I know. Perfect, I see a yes, I see a couple thumbs ups. Great. Hillary, I will share it with you. It's in this chat. There you go. Roxana, I just put it in the chat as well. Let me know if you guys are able to click into that link. I want you all to either make a copy of this. You can do so by going up to File and make a copy so you have your own copy, or you could just literally copy and paste this into a different Google Doc or a Word doc or even your email. And this is going to be our system prompt. So what we're going to do here is I'm going to open up Claude. Claude is one of my favorite AI tools. I think a lot of the classes I've been doing recently have been on Perplexity, which can also work for this. ChatGPT can also work for this, so you're not married to only using Claude. You can use your favorite AI to do this. But what I've done is I've created a project, and you all have the ability on a free Claude plan to do this. Similarly, you can do it on ChatGPT or Perplexity or any of those. And then that big long document, all I've done is copied and pasted it into the instructions. So what this is going to do, and we're going to do this together, is this is my property analyst. So the power of this is I can give it MLS cut sheets to take a look at and underwrite and tell me if a property is going to be good, bad, or ugly as an investment. So what I've done is I just went on the MLS, I pulled a quick cut sheet from Matrix, downloaded it. So now when I go into Claude here, I'm going to go to my downloads, I'm going to drop this in, and I am not going to say anything because the instructions in here tell Claude or ChatGPT exactly what to do. And I'm just going to hit go. Now, I will highlight, this is a very, very thorough prompt. If we look through this, it has the role, it has a specific two-tier output, and I'm going to show you all why. It talks about the intake, it talks about reading the MLS sheets. This is very specific. So because there's so much specificity, and this is a quite literally 10-page document, this is not going to be the fastest, I'm going to say, AI response you'll ever get, but it's going to be very, very thorough. So the goal here is for this to do a couple things. We actually have our two screening prompts, just to show you what you'll see, is one, we have what I call our kill screen, which is our faster agent facing. It's roughly a half page of the verdict. Is this a good or bad investment? Here's the reason, and here are the questions I want you to answer for me. That runs on every time we put an MLS sheet in here. And two, we have the investment screen PDF. So this will then create, if we ask it, a client-facing document that we can share with a client, with another agent, to talk about how we made these decisions on if this is a good investment property or not. So we are just about through our first step of this. And you'll see on here that this is being very thorough. It's doing research. This is a very, very thorough prompt. Now, I see a question in here. Hillary, it doesn't matter if it's with, let's see, if it's with Flex or Matrix, it should not matter. What I would do in your case, if it's with Flex instead of Matrix, I would take this prompt, I would copy and paste it into Claude, and then I would actually download your own MLS sheet, and I would tell Claude, here's my MLS sheet, give it to Claude, here's my prompt, and just ask, do I need to do anything different for my MLS sheet than the prompt is telling me? Are you getting that? Does that make sense? Perfect. And I'm happy to, if you want to shoot me an email or anything, I'm happy to help you out with that as well. So here we are. We are on the tier one. Again, the kill screen. This is our quick snapshot. So what this is returning is, we know there's no HOA. We don't see any, STR prohibited there. So we should be able to run STRs. Talks about the roof being in 2024, the AC in 2021, and it is pulling all this from the MLS cut sheet, just so you all know. And then it does highlight some of the tax corrections. So currently they're showing a homestead exemption, and it's going to give us an updated tax rate. From there, it's going to start to give us some scores. Can I please repost? Yes, I'll put this back in there. Let me copy the link. There you go, back in the chat. So this is giving us some initial scores, and this doesn't look like a great investment from the outskirt. And that's the reason we have a two-step program. So the first is to tell us, hey, is it worth evaluating further? If I was looking at this scored at a buy and hold, this would score a 1 out of 10, a low confidence. For an STR, a 2 out of 10, pretty low confidence. And then we have a fix and flip where it's just basically saying, not even a candidate. So if I was searching for a property to share with a client, or if I was looking to invest myself, I would probably stop here and realize the cap rate's low, the DSCR is way too low. It doesn't look like it's going to serve as a short-term rental. However, for the sake of our example, I don't want to pull 20 different MLS sheets, which this can do, by the way, and we're going to assume that we want to carry on. So it's giving us this ledger here of where all the data was sourced. And this is really important. It also highlights what has been estimated by AI. So I like to highlight that because if you all are sharing this with a client or sharing this with an investor, you want to make sure that you highlight what has been verified and what has been estimated. So now we have our few things it wants us to verify, and we're actually going to proceed, even though this is probably not a property I would recommend to any investor, we're going to proceed to the tier 2 PDF. I want to show you all what the output can look like. So now it's going to ask me a couple quick questions, and it's going to do this on every single one. And I'm just going to answer the questions and go down the line. So the strategy for this, I would say, is a buy and hold. Financing, we're going to say this is financed with 25% down. Current income, so this would replace rent. Because this MLS sheet said it's being rented right now, it's making that assumption. If not, it would just ask us, what's the rent roll? I'm going to say rent in this area is going to be ballpark. We're going to call it $3,000 a month. Condition, I'm going to say it's turnkey, so it doesn't need any upgrades. My investor client that we've made up here, Mr. Investor, I'm going to say is going to hold this for 10 plus years. If I can type. And then lastly, threshold, minimum monthly cash flow or minimum cash on cash a client needs. Anytime you're working with an investment client, you really want to understand what their goals are for success. Monthly cash flow, appreciation goals, cash on cash needs are all going to vary depending on the investor. For this one, I'm going to say we want minimum $200 up per month. And now it's going to take my answers and it's going to go into an even deeper dive and create us a report that we can share. So we're going to go into this tier 2 output here. We've filled out the tier 1 and it's going to go into all the defaults, the scoring. As I mentioned, this is a very long, very detailed prompt. And it's going to start to give us in the next one a confidence rating, an assumption ledger, and it's going to give us a specific structure. So it's going to tell us on this PDF what property is it, what type of property, what's the address. It's going to give us scores and strategies for each of those buy and holds, the STRs, as well as the fix and flips. It's then going to recommend one based on all the numbers. It's going to take that financial summary and show us how this property will perform in real time. It's going to have our assumption ledger, and then it's going to have some some risk notes, which is really important with investments. And then lastly, I do always like to highlight anytime you're creating an AI prompt, you want to have some guardrails in place. So these are things like never invent a comp, never invent an insurance premium, never carry an MLS tax figure unless it's re-examined, never suppress a bad score, because AI, if any of you have spent significant time utilizing these tools, a lot of times they like to make stuff up. So having these guardrails in place is very good prompting practice. Now, let's go ahead and check on our PDF. So it has returned more information, which is great. And then it's finally going to ask me, I can produce the tier 2 PDF if you'd like. I'm going to say, please produce it. I always joke, I always use my please and thank yous on AI in case we end up like the Terminator in another, 50 years. So I don't know if that's good or bad. Fun fact, the AI companies themselves, Claude, OpenAI, all of them have come out and said, please stop using please and thank yous and proper manners on these because it just wastes, believe it or not, it wastes millions of dollars in what's called tokens for these companies every single year with how many people will reply back a thank you or a please or a good job. So I always find that kind of funny that anytime you reply back, hey, thanks Claude or thanks ChatGPT, you are costing these companies a ton of money over time. So Now it's going to go through and it's going to take that information and build us a really nice PDF. Just to reiterate, a lot of you have probably used, ChatGPT, Claude, and a lot of these before, and they've been a little bit faster responses than what we're seeing here. We could take the shortcut and create a much slower, or excuse me, much faster, much shorter prompt. But I really prefer when what we're putting out, especially if the goal or the intention is to share with others, we're putting out something that's really well scoped. So that's why this is not the fastest system that you'll ever come across. We could definitely come in here and we could update this and say you have 60 seconds, run cap rate, run cash on cash, tell me if it's a good or bad investment, and it would do that. But it's ultimately, at least for myself, I don't believe it's serving the client in the best way or serving us as professionals in the best way. So we are getting ready. It's just rendering these page layouts, and then we will have our nice PDF. This PDF is unbranded, by the way. If you all would like to have specific colors, you can do so here within the prompt. You can go and edit it. Let's see, where's that section at? Here we go, PDF spec. So you could tell it, I want navy blue and white, or I want hot pink and teal. You could give it specific colors. You could have it put your name on it. But I left this generic so that everybody could use this, and you can always go in and make it your own. Oh, we're so close on our PDF. We have a zoom in here, but Claude ran into two issues, so it is fixing this for us in real time, and then we'll take a look at our nice PDF in here in a second. But while this is wrapping up, does anybody have any questions on this process so far? Anything I can answer? Any questions on anything investment or our little investment project related? Not seeing any takers, no problem. I'm going to assume everybody's a AI pro and knows exactly where we're at in the process, which is perfect.
Hi, Todd. This is Chantel. I do have a
Oh,
question if it's okay if I come off mute.
yes, of
Okay.
course, fire away.
So with the prompt, I see in on the screen that you're sharing, there was like different tabs. So does the lines in between the different prompts create those tabs in Claude if we were to like paste this into a project?
More or less. It's not really are you talking about these lines in specific?
Yeah, and then you see your document tabs. Like how do
Yeah.
we get the
This
document
is not
tabs?
super important, to be honest with you. Why this is coming across this way is this I technically exported as something called a markdown file, and then Google converted it. So you don't have to worry about the specific tabs. You don't have to worry about the formatting. As long as you just copy and paste this over, Claude or ChatGPT or whichever AI system will be able to interpret the sections correctly.
Okay. Thank you so much.
Of course. I see another question in the chat of can ChatGPT? Yes, ChatGPT can do this as well. I just like Claude a little bit better, so I spend a lot more time on Claude than ChatGPT. But yes, you can do this on ChatGPT. You can do this on Gemini. You can do it on Perplexity, Claude. They will all work for something like this. I think Claude does a really good job with reasoning for these, and that's why I chose to show you all here in Claude. Now we are just about done. It looks like we got our couple pages starting to render. And this is going to be a very, very detailed report, which is going to be really nice when we actually have a property that will cash flow and looks like a good investment. I didn't spend the time looking through a bunch of properties on the MLS. I just grabbed a cut sheet here. So we're doing this in real time together. But it's also nice to see when a property may not be the best choice for us. Any other questions as we give this another minute or so? Hillary, I have a paid Claude. I named the product. Did I tell it to hold that file until I upload properties? So you do not need to give the project that file. You just need to copy and paste the prompt into the instructions of that file. So if you're in here You don't need to drop that, that current MLS sheet in here. You would just put the prompt in the instructions. Okay, now we have our nice PDF. So all that work ended up going to, oh, that is large. Let's bring it down a little bit, maybe. You know what? Let's open it up in a doc here. That's a little bit better. Okay, so we have a really nice condensed 2-page report here. This is very professional looking. It goes through all the sections that our prompt told us. First and foremost, on the property, it highlights all the information from the MLS. So list price, price per square foot, talks about the system, zoning. We even see that this one was tenant occupied. $3,000 a month, which we told it. That's great. We want that specificity. And then we get into our strategy scores. Now, we know from our first run of this that this was not looking like a great investment property, but we wanted to carry on anyways to show you all the outputs here. So you'll see that the scores on these is a little rough. Buy and hold, 1 out of 10. If it's financed, if it's all cash, it doesn't go up too much. Talks about the basis of why it made these assumptions. And then it also told us that this doesn't look like a great flip opportunity, which makes a lot of sense. Recommended path. This always makes a recommendation, which is really nice. Makes us sound like the experts. Says, do not pursue at the current list price. I don't think we can get much more clear than that. Under the stated terms, the property actually produces a negative monthly cash flow. And this is something that, depending on your market, it can be very hard to find properties on market that do underwrite as a solid investment. So next, we get into the financial summary. We talk about things like our vacancy, our maintenance, CapEx, all the important parts that so many people forget about when they underwrite a property. There are more expenses that go into owning a property than insurance and paying your property management and the normal stuff. We have to think about vacancy. We have to think about when things break and capital expenditures. So this is very thorough in getting us to effectively this property would not cash flow. We'd be underwater a little over $9,000 a year. And then we talk a little bit more about projections. We talk about assumptions, which is great. And this is that important part that I mentioned to you all, that some of these things are estimated. So if we've done some due diligence and we run this through once and we're like, this looks like it could be a really great opportunity for my client, we could then go back in and we could tell Claude in this case, the property taxes are going to be X. The interest rate is 6.35 at 30-year fixed. We can actually clean up these assumptions to get an even higher confidence score. And then on top of that, we have this opportunity for verifying before writing an offer, risk notes, and then a little disclaimer. This is for discussion purposes only, not an appraisal. So all of that work went into a really nice document that we can share with whomever, clients, investors, that we could just have in our back pocket if we're looking to start as investors ourselves. But it's as easy as grabbing the prompt, creating a Claude project, and then dropping in an MLS sheet and waiting a few minutes. So with that, any questions on this process?